G'day and welcome to this week's video. This week I had an interesting question from a client, and it's not an uncommon one. It was about their cash reserves and what they should potentially do with it. So these clients, probably around $50,000 in cash reserves. It's more than what they need in their account at any one time. So they're thinking about longer term investments, possibly an upgrade of the car, which, as I stated, very much their decision. But what to do with the rest? Well, one option I gave them was a very boring superannuation strategy. So it's all about making the most of your cash reserves. So some thinking might be around putting that money in buying some shares and investing in their own names, and that's a very relevant strategy. But just as an aside and thinking a little bit left field, could this cash reserve be used to help with cash flow and therefore increase salary sacrifice options? So I've just done this very quick PowerPoint presentation just to give you a bit of an example. So these people on an income of approximately $70,000. So every dollar you earn between $37,000 and up to $87,000, you're in a marginal tax rate of 34.5%. So any dollars you earn between 37,000 and 87, you're going to pay 34.5% tax to the government. On the cash that they've got, the best you're going to do in a term deposit is probably around 2.5%. If it's in a trading account, you'll be getting closer to nothing. So we know, obviously, rates of return on our cash is very low. So they're getting not much joy there at all. So of that 50 grand, what if we utilised 20,000 of those cash reserves, and for the next 4 years we used $5,000 per year, and we receive that on a fortnightly or monthly or weekly basis, drip fed to us, and use that as cash flow. And the reason why we'd look to do that is it would then allow us to utilise the very boring salary sacrifice, and we can put a pre-tax $8,000 into their superannuation each year, at least for those 4 years. So that strategy is going to save a very substantial $1,560, which works out to be just under a 20% tax saving for each of those 4 years. So I see that as a really beneficial way to utilise cash reserves to give the ability to save tax. And as I've always said, let's get the simple things right. We save as much tax as we can, and then we find the right asset base to invest into, the right asset class. So as opposed to investing in their own names, you might average 8 to 10% in a share portfolio, but here, day one, from a tax point of view, we're saving nearly 20%. Now, on top of that tax saving, those savings sit within superannuation, and you're getting earnings on that money as well. So it's immediately working for you. So those savings that you get are now, we're applying compounding interest in a very concessionally taxed superannuation environment. So this is a very clever way to utilise cash reserves. It's a little bit different thinking rather than just solely investing. Can you use your cash reserves to increase your salary sacrifice, and therefore reducing the amount of tax you pay on an ongoing basis? Give us a thumbs up if you liked the video and subscribe to the channel. That'd be awesome. Thank you for that, and we'll catch you next week. Thanks for listening.